Hello, I'm Brian Lucareli, Director of Private Client Services Group and co-chair of our family offices team at Foley and Lardner. And today I'm here with Nate Imfeld, Senior Counsel and member of our family offices team. Welcome, Nate.
Thanks, Brian. Happy to be here.
Thank you. And today we're going to be discussing some recent trends in family office risk and litigation. But Nate, before you do that, could you give a little more background on you personally so our audience has a little more sense of who you are?
Sure. So I'm one of the early members of our family office group here at Foley, and I focus primarily on the litigation side of that practice. So I deal with circumstances where risk has turned into litigation. So that could be a variety of different circumstances: trust litigation, families, privately held securities litigation. It runs the gamut. Sometimes investment-related litigation, that kind of stuff.
Well, clearly, we appreciate your expertise you're going to share with us today. And so I'm going to kick it off with a question and we'll just kind of go from there, if that's all right.
Absolutely. Sounds great, Brian.
Great. So we're all aware of this economic environment for businesses and investments have shifted very dramatically this past year. How have you seen that this has impacted the dispute and litigation risk for our family office clients?
Sure. Well, probably the biggest change that has happened from a litigation perspective is just simply that bad results drive conflict, right? So when you're dealing with family offices, particularly family offices where it's not, a single family member's money that's being managed inside the family office, bad results create friction between multiple stakeholders, right? So where you've got family members who have potentially different risk tolerances, and that's kind of been below the surface while things have been going well. As results have turned poor, a lot of those sort of risk tolerance issues have kind of come to the fore and generated a lot of discussion. That discussion is often in the form of conflict. That's been especially pronounced when you talk about some of the more exotic investment categories like crypto, which have done especially poorly, and some family offices were especially enthusiastic about piling into, given the returns that they were generating over the last few years. I think probably finally on a note about advisors, right, and outside advisors as well as family office executives, this is a heightened risk environment, right, where when there's conflict between family members and between stakeholders in the family office, sometimes they're looking for a scapegoat, and often they'll go find the person who they think gave them the bad tip, in effect, and kind of blame that person for the issues that are simmering beneath the surface.
Interesting. So how are you seeing that this is playing out at the family level, like the core family level within the family office?
Yeah, so the family, with respect to family offices, the focus is often on dividends, right? What assets are coming out of the family office to support the family itself. And in an environment like this one, there's reduced assets for distribution, and that's a key point of conflict between family members. Some people will be saying, look, you got to buy the dip, you got to be putting in more money. Other people will be saying, you got to maintain my lifestyle, you got to make sure that we're getting money out for the family's benefit. And that conflict is really, really central. I mean, it's kind of the key form of conflict that comes up in family offices with multiple family members and multiple stakeholders. You can also have problems that get generated when you've relied on an income stream coming out of the family office to support some sophisticated estate planning, something like an installment sale, right? That there are assumptions built into those estate plans about how much dividend stream is going to come out of the entity, and those sort of expectations can get upset and create problems. And where you've still got an operating business in the mix, that can greatly complicate the calculus. People were, potentially thinking that an exit was coming on a particular time horizon, and that time horizon's been completely disrupted by changes in the economic environment.
Interesting. So putting on your litigator hat for a moment, and probably most importantly, and probably most important to the audience that is tuned into this, is what can be done from a risk mitigation standpoint?
Well, I'll take it from the beginning here in terms of what probably maybe ought to have been done. Because once you're in the middle of one of these situations, it's really just all about mediating and trying to build better communication and work through the issue to avoid litigation. In terms of structure, though, structural things that can be done, I'm not by any stretch of the imagination an investment advisor, but just because of the volume of conflict that I see generated by high-risk investment classes, you really need to build a lot of structure and governance around stuff like that, and potentially avoid those classes where you've got people with different risk tolerances kind of all invested in the same pool of assets. That differential risk tolerance problem just creates all manner of issues. It doesn't mean you can't invest in those asset classes. It just means you need to work to build structures that protect lower risk tolerance family members from exposure to them. And relatedly, when you've got shared assets, there has to be some kind of mechanism for shared decision making, even if ultimately the decision is in the hand of a founder or a founding couple. Ultimately, getting family members further down the food chain into later generations feeling like they have a stake in the game and feeling like they have a say can really do a lot to both limit conflict between generations, but also within generations, right? People feeling like they have different levels of say.
Well, Nate, I can't thank you enough for sharing your insights and certainly your time today. And I want to thank everybody that tuned in today for watching our presentation. For more information, please visit us at foley.com under Family Offices. Again, thank you, Nate.
Thanks, Brian.